we will upload this onto YouTube later on. Great.
Okay.
I think we're live. Let me just.
Yeah, it says that we are.
Oh, right. Cool. I'll just mute myself on Facebook just in case, because sometimes I can hear myself. Oh, yeah, perfect. That's muted. Great. We're in. Awesome. Cool.
Yeah.
Well, hello, everyone. Today is April 21st of April. Goodness, the time is flying. So we're almost at the end of April now. And what is that? 4 months. 4 months of the year. It's gone just like that. And a lot has happened in the last 4 months and in the last months. And today I'm joined by lovely Kat Henry from Aristo Real Estate. Did I say that right?
Yeah, Aristo. Yeah. Hi, guys.
Awesome. So Kat and I decided to join forces and just educate everyone a little bit on the property market. Obviously, quick disclosure, her and I don't have the ball. What is it called? The crystal ball. Thank you. The crystal ball, and any advice we are giving today is not an advice. It's just merely our thoughts on the market, what the market is doing, where do we think maybe it's heading, and what you could do to benefit and to make the most out of it. So I will just quickly do my quick spiel on the mortgages, and then I'll ask Kat some questions.
Awesome. Sounds good.
Yeah, I think, great. So OCR went up by 0.5 basis, and the banks went nuts, and all the rates went up as well with that. But I mean, the banks have been putting up their rates for a while now as well. So for the past few months, we've been seeing them slowly climbing in. If you're following my pages, every now and then I share when we get an announcement from the banks. But BNZ absolutely blown everyone away 2 days ago. Was it yesterday? I've lost track of time. They went completely crazy with their rates. And I feel like other banks will just follow suit slowly. In terms of lending easing up, I've noticed the banks have eased up a little bit, even though they're talking that, you know, new regulations will kick in June and stuff, but the banks have started to become a bit more reasonable. So that's a good sign for those that are looking to buy. Obviously, you still got to be good with money, because what this regulation has shown to all of us, the whole New Zealand, is we suck with money. The more we earn, the more we spend. So the idea is try to save, try to put money away, try not to have that extra takeaway large soya mocha that you have every single day. Maybe skip a day, maybe try not to have it as often. So my suggestion to those that are looking to buy right now, as an advisor, now is a good time to get your ducks in a row and go buy, because the property market has slowed down a little bit and the prices have gone down a little bit. But this is where Kat will come in shortly and tell us her thoughts on it and how she sees things happening. So Kat, tell me, what's going on with the property market?
Yeah, so a lot of people would have noticed that we have done an almost 180. So what we were seeing previously is that it was a really buoyant seller's market, which means that there wasn't a lot of stock out there. The buyers that were looking, if they wanted to get in, they really had to have a really strong offer. Often there would be multiple offers on the same property. Complete opposite now. So we're now in a buyer's market. There is more stock than there has been in a really long time. In the past year, we've seen an increase of 105.2% in terms of stock, particularly in the Manawatu. I'm not too sure if that's a specific figure for everywhere, but definitely Manawatu, Horowhenua, Kapiti. It's taking longer for properties to sell. So instead of putting a property on the market and within the first 2 weeks, yeah, bam, done, it's sold. It's now taking around 50 to 53 working days. Days for it to sell. So they're sitting for a lot longer.
Сейчас я Zoom подключу здесь.
Yeah, so it's completely different now. Sales are down about 29% annually. So not only are properties sitting for longer, but some are harder to sell in general. The median house price has gone down slightly, which a lot of people, if you've been paying attention to the listing prices for properties, you'll notice that a number of them have been dropping their price. So it's definitely different out there.
That's one thing you mentioned that I was going to talk about as well, is that FOMO is gone. The one that we were talking a lot in 2020 and 21. It was a huge thing. Buyers.
Fear of missing out.
Fear of missing out. And before, I've been talking to a few agents as well. They were saying, you know, people would come in and they'll just buy anything and everything. As first-time buyers, they were just so afraid to miss out, and they'll put ridiculous offers in. They will put not many conditions. And if it's not a dream home, so what? They'll just
doesn't
buy
matter.
Yeah, doesn't matter.
Just had to buy something.
Yeah. So now what we're seeing is people are becoming a bit more pickier, a bit choosy, and if it doesn't tick the right boxes for them, they actually walk out and walk away. However, I've got a feeling it's not going to last long. I feel like it's a short window. And because we're making videos of this, and it's going to probably stay on the internet forever, I want to come back to this video in 6 months' time and revisit this, because I feel like this is the short window opportunity for those investors that are looking to get some good deals, or for the first-home buyers looking to get into the property market. Because, and I'll explain my logic now, soon there will be a lot more people coming back to New Zealand. And I know they're talking about the brain drain, so a lot of New Zealanders will be leaving New Zealand, but at the same time, there are other people that will be coming into New Zealand, coming back to New Zealand, and New Zealand has been seen as a safe haven. So people will be looking to buy more properties. And the rent is going up as well. The cost of living is going up as well, because of the inflation going up. So I feel like people will start comparing that, hey, even if the interest rates are 4.5%, even if they're 5%, it's probably still better if I live in my own home versus paying ridiculous rent to my landlord.
Definitely.
Because what's going to happen is a lot of investors that have bought properties a few years ago, now we're going to be suffering big time as the interest rates have gone up a couple of percent compared to a few years ago. The interest rates have gone up, so therefore the cash flow on those investment properties has gone down. And the way to recoup that is to increase the rent. And who's going to suffer is Jack and Jill that are trying to buy a house.
Trying to buy a house, yeah, definitely. And we're seeing a lot more people that are perhaps renting at the moment coming in, and one of the first things they say when I ask them, what's your motivation for buying, is I'm so sick of paying X amount of rent when if I got a mortgage it would be less, because rent prices are just over the roof crazy.
Astronomical. I think some people, like when I look at their applications, when I do applications for my first-time buyers, 70% of their income could be going towards rent. How are you able to save money if you're paying so much on rent?
That's right, where they could put that towards their own equity and be in a much better financial position.
Absolutely. What also is happening at the moment, interestingly enough, is I'm getting a lot of mum and dad investors coming to me, and they're trying to future-proof for their kids. They're trying to buy a property right now because they understand that in 10 years' time, their 13-year-old teenager right now will not be able to buy a house in 10 years' time. So they're trying to buy a house right now for them to get their kids onto the property ladder, or help their kids down the track onto the property ladder. So that's why I feel like, even though a lot of first-home buyers may be being a bit picky and choosy and they're staying a bit back, I feel like there's still other people out there that will drive the market back in. And or maybe people that are listening to this tonight, they're like, "Yay, good time to buy, let's go."
Yeah, right now. Yeah, it is a good time to buy, though. That's the reality of it, is if you have been thinking about it, it is a really good time. You're in, as a buyer, you're in a much better position to negotiate and to have conditions. It's completely, most vendors understand that it's highly unlikely they're going to get a cash buyer, that there's going to be conditions attached with it, and most of them are more than willing to work with those conditions. And potentially wait for a buyer to satisfy those conditions, where previously, if you had conditions, you didn't really have much hope. Or you would maybe enter into the contract and then get cashed out. But it's not the case anymore. It's not happening anywhere near as much as what it was.
Yeah. So the other thing I also have been thinking about, and I've been talking about it every single webinar, I think, is the building boom that was happening in New Zealand, and now we're sort of stalling because there are not enough materials.
There's no material.
There is no materials and there is no trade people to do it. I was just talking to another client the other day, and she said they can't get the build, like the build timeline keeps moving because the builder had COVID, and then his workers had COVID, and then someone else had COVID, because you have to still isolate for 7 days. It's just everything is taking so much longer. And if the weather changes, then you've missed out the opportunity. If you haven't done the foundation, if you haven't done the frames on time, and haven't closed the house, you're screwed. And then we don't have JIP. So
that's right. If you don't have JIP, you're going to be waiting a wee while.
Exactly. So again, I think that will turn people to look back into the existing stock and to existing properties that are out there. So that's why.
And of course, new build prices are going to go up, because the more that labor costs increase and all the prices for materials, the more that they're going to increase, that's going to be passed on to people that are building.
Exactly, because at the end of the day, I mean, who is building those houses? It's developers, and it's developers that I work with, and I see their financial situation, and I see why they need to increase those prices, because if they don't increase those prices, they're going to go under.
That's right.
It's really interesting position for me to be in, because I'm helping a first home buyer, and I see what the first home buyers coming in and what sort of position they have. But at the same time, I sympathize with developers too, because I see their position. They're not this greedy monsters that the media makes them out to be. I mean, of course, there are some bad developers, but I only work with nice people.
Not all of them. Yeah. Some of them, it's just generally, just like everybody else, they're just trying to make a living.
They're just
trying to survive.
Yeah. So it's really interesting to see what's going to happen and what life's going to bring us. So tell me, what sort of properties you've got on the market at the moment that might be of interest to some people? What sort of jams have you got that you could tell us?
I've got a few 2-bedroom townhouses. I think I've got about 3 currently. So 2-bedroom townhouses. A lot of people seem to be looking at moving from them. You know, particularly in Levin, we have an older population, so a number of them are perhaps moving to a retirement village, that kind of thing. So there's a few really good brick townhouses, really tidy. They are move-in ready. You wouldn't need to do anything for them. All really close to town too, so really great rental opportunities, or if people are looking at downsizing, or maybe even a first home if you're happy to live in a townhouse. I've got some really big family homes. So if people are looking at maybe moving into perhaps not so much a first home, but maybe they're looking at upsizing. We've got some ranging from 3 bedrooms right up to 5 bedrooms. And a number of move-in ready 3-bedroom homes where you don't need to do anything. You literally just walk in, it's all been done for you.
And just for out of town people that not familiar with Levin, because I do have a lot of investors like up in Auckland or somewhere else, or even people that may be living in Auckland, but they can't buy in Auckland, but they can work remotely. Can you just give us some figures? Like, for instance, a property in Levin, how much would that cost and how much it would rent for?
Oh, look, rent prices here are absolutely crazy. Your standard 3-bedroom property, you can rent for about $550 per week.
And how much would that cost me? How much would that house cost me?
A 3-bedroom, anywhere from sort of $550 to $650.
Okay, so I'm buying a house for $550 to $600, and I can rent it at $550 per week.
Yeah, so it's a good investment, and some of them are subdividable. So if you're looking for future options, you can also future back subdivide it. If you've got kids, maybe they could have the back section, build their house down the track. So there's some definitely some good future options if that's where people are looking.
Wow, because just to give you an example, I mean, I was doing a deal for a client, and I think they're buying a property like up in Auckland, you know, for 1 million, 1.2 million, and the rent on that is like $600 per week.
Yeah. So rent here is really, really high. If you've got 4-bedroom house, you're looking at more than $650 per week. If it's a brand new house, so if you wanted to buy a section, I've got 3 sections available currently, by the way. If you wanted to build, you can get a brand new or have a brand new 3-bedroom house, and you're paying more than or getting more than $650 in rent for a brand new house. Some people are charging $700 per week.
That's crazy. That's crazy. And how long does it take from Levin to Wellington now?
Well, if you ask one of my clients who just moved up here tonight, they were able to make it from Horowhenua to Levin in less than an hour, because I was expecting them to not make it here until about 6:30, and I get a phone call at 5:45 saying, yeah, we made it to Levin already.
Wow.
I know.
Well,
but generally speaking, you probably want to add 20 minutes or so about an hour and a half.
Okay. But the transmission galley, I mean, once they're fully complete, because I know Levin has currently got some
galley,
as well. That's going to be incredible. I mean, Kapiti, where I am, has seen an incredible increase in house prices. You can't buy anything here under $1 million. Well, you can buy maybe a shoebox for a little price. Yeah, 700K. But yeah, it's incredible how much the infrastructure makes a difference to house prices.
Yeah. Definitely. And with transmission gully opening, we are seeing a lot more people from Wellington moving up here or from Kapiti.
Yeah.
Because the commute is not quite so daunting.
No.
And of course, work from home, a lot of people are able to negotiate like flexible working situations. So they spend a couple of days down in the office and then they do the rest of the work from home.
Yeah, and I think it's still better than like Wairarapa. I had one of my clients move to Wairarapa, and she was saying that she had to get up at like 4:30 in the morning to be at work by 8:30 or something, because it takes an hour and a half or more from Wairarapa to get to Wellington. And yeah, no,
there's some early starts.
Yeah. I'm glad I'm self-employed. I don't have to do that. But then I remember I've got 4 kids and I don't sleep.
Exactly. Who needs sleep anyway when you're a working parent?
Yeah, exactly. And school holidays, Kat. School holidays.
Oh no.
Yeah. So lots of fun for you.
Life.
Yeah. So I also work with a lot of
my life. Yeah.
I also work with a lot of flippers, we call them, where they buy a house, they renovate, and then flip it back onto the market. What can you tell me about that? What's happening there?
You got to be really, really careful that you're not overcapitalizing, and that you are buying at the right price. So there's been a lot of buyers and flippers in particular who have maybe tried to do the subdivision route and they haven't really known what they're doing. So if you're going to go down the buy a house, subdivide the back, sell that off, make sure you are using really reputable people. Otherwise, you're going to be in for a lot of money. The Horowhenua District Council in particular have changed some of their subdivision requirements recently. So there's a lot of additional expenses there. But there is definitely a lot of people out there that would rather move in to something that is completely done. So if you're buying something for a good price and renovating it, and then people don't have to do anything, that's a lot more appealing at the moment, it seems, for most people, particularly young families that have kids. They often don't want to move into homes and, warm, dry, livable as it is.
Wow, now that's some really good advice there. Thank you so much, Kat. So hopefully that will strike a chord with someone. Usually I wrap it up really fast. If anyone has any questions, they're free now to type into a little chat box if you've got a question. And if you don't have a question, I just wanted to say, Kat, your kids have been amazing. I don't know what you've done to them for the past 20 minutes. I haven't heard a sound, so well done.
They are in my daughter's bedroom and I can hear them. I can hear them squealing. So I am a little bit concerned what I'm going to walk into and how long it's going to take me to clean it up. I don't know if I want to know. Either that or they've got the cat in there and I'm not sure if the cat's going to be scarred forever.
Poor cat. Which reminds me, when you said scarred, which reminds me, a lot of people were squealing about CCFA, that's right, that's what I was going to talk about. A lot of people have been asking questions about the CCFA and what's happening. And a few conversations I'm having with people where they say, oh, so the CCFA is easing, so I don't need to have an income to buy a house.
Well,
you still need to have an income to buy a house.
You probably still need to have a way to pay your mortgage, unfortunately.
Yeah. So usually for people that are in that situation, if you're a first home buyer, if you don't have much deposit, you still need really good income to make it stack for the bank. Because one thing that the interest rates are increasing that you guys can see, that normal everyday people can see, right? So let's say 1 year rate went from 3.99 to 4.15, and now we're sitting at 4.39 for a 1 year rate. But also what you don't see is changing is the test rates behind the scenes. I always talk about those test rates is what we base when we calculate someone's ability to borrow money. We usually calculate it at much higher rates that the bank give us. And usually those rates are about 6.5% or up to 7%. These are the stress rates to see if the rates went up that way, will Jack and Jill be able to continue to pay for their mortgage? And therefore, one thing that people need to realize is that the income needs to be much higher than you think it should be. Because when you go on the bank's calculators online, I don't know how they work, because they magically show people that they can borrow $2 million.
Yeah, no. They are usually based on, so people can go in and, because we've done it all the time, and we're like, wow, we can borrow that much. That's crazy.
No.
But then in reality, no, that's not the case. But usually people can go in and on those calculators, they can just enter in whatever rates they want. So of course, people will probably maybe put it at the lowest of the rates. I'm not too sure how other people get it, but we would just generally estimate what the rate might be. No relevance whatsoever to how you guys work it out.
Yeah, completely different. So so just something to keep an eye on if you are a first-home buyer, or if you, I don't know, an investor trying to estimate your own thing, how much you can borrow. Please don't rely on those calculators. They are not reliable. They're not the best, and do seek professional help. Either mine, Kat's, as a real estate finder, or go to your bank if you can get through the bank. At the moment, that's another issue as well I'm having, is a lot of people calling me and they're saying, I can't get through to my bank.
Yeah.
Because a lot of what's also happened is a lot of people working from home, a lot of people get laid off during the pandemic. So banks are struggling and banks are behind. And it has made our workload much higher. But at the same time, I just feel sorry for people that are trying to get a decision, trying to find.
So what is the general time frame? So like, how long is it taking? Generally speaking, when somebody applies for a loan, how long? Because it's useful for me to know. People always need to put finance in, and I'm like, well, how long do you need? Like,
usually, if I met with a person and if they gave me everything at once, I submit it straight away. We can get an answer within 5 to 7 days.
Okay.
Yeah, but remember, if they're first home buyer, they also need to get registered valuation done. And this is that's another point actually that's been letting us down lately, is people might put an offer of 650 and then the valuation might come back at 630 or 600 because the value of things, the property prices have gone down. And if they only had 10% deposit, the bank has to now tell people that they need more deposit to come up with, because the bank will always take the lower of the two. So even if you put an offer of 650, but the valuation is 600, the bank will see the property is valued at 600, not 650.
Yeah, so that's really good for people to know.
Yeah. So that's why.
And something that I'm going to have some conversations with a few of my buyers for potentially.
Yeah, and that's where if they're already struggling, they'll only have 10% deposit, they will have to go back to the bank and say, hey, we need more money, or they go back to the vendor and negotiate the price down. So I guess that's where you will see few property prices dropping down a bit because people are negotiating. Yeah. I see you're already looking sideways. I see your time is up. So
yeah.
Thank you so much for joining me tonight.
Patience.
Thank you so much for joining me
Thanks
tonight.
for having me.
It was fun. It was quite informative. So hopefully it was informative for other people. And I think we've answered all the questions that came through to me in the private chat. And yeah, well, stay in touch.
Awesome.
Thank you.
Enjoy the rest of the school holidays.
You too.
All righty. I'll try to stay sane.
Thank you. Bye.
All right. Thanks. See ya.
See you.